We're surrounded by flashy success stories, screenshots of massive days, headlines about explosive growth, entrepreneurs posing next to cars they claim their business bought in 6 months. It's loud, dramatic, and addictive to watch. But behind most lasting wealth, you'll find something far less exciting. Quiet operators doing the same things over and over again. Our culture worships speed and scale. We celebrate the fastest startup to hit a milestone, the quickest investor to double their money, the most viral launch. Slow is seen as weak. Steady is seen as small. If it's not dramatic, we assume it's not meaningful. But consistent profit doesn't come from dramatic bursts. It comes from repetition, from restraint, from patience. It comes from choosing not to chase every opportunity, from doing the boring work when no one is watching, from refining the same process instead of reinventing everything every quarter. The truth is simple. If you want consistent profit, you have to get comfortable with consistency. And consistency is boring. Before we go further, we need to define what we're actually talking about. Revenue is the total money that comes in. Profit is what's left after expenses. Cash flow is the timing of when money enters and leaves your business. You can have high revenue and still lose money. You can show a profit on paper and still run out of cash. Consistent profit means that after all expenses, month after month, there is money left over. Not just once, not just during a lucky quarter, but repeatedly. There's a big difference between a one-time win and a repeatable system. A one-time win might come from a viral post, a big referral, or a hot market. A repeatable system generates customers, delivers value, and collects payment in a predictable way. Spikes feel good. Big months are exciting. But stability is more powerful. Predictability allows you to plan, hire, invest, and sleep at night. It reduces stress and increases clarity. Consistency can be measured. Are you profitable most months of the year? Are margins steady? Are expenses controlled? Are customer acquisition costs predictable? Consistent profit isn't about dramatic highs. It's about reliable performance. It's about building a machine that works even when you're not feeling lucky. We love the idea of the big break, the one deal that changes everything, the one investment that 10 times, the one launch that transforms your life overnight. But this story leaves something out: survivorship bias. We only hear from the winners. We don't see the thousands who tried the same strategy and failed. We don't see the graveyard of businesses that bet everything on one swing. What looks like overnight success is usually the result of years of preparation, years of refining offers, years of building skills, years of small, unnoticed improvements. By the time the big break happens, the foundation has already been laid. The danger is building your entire strategy around rare outcomes. If your plan depends on going viral, landing a massive client, or catching a perfect market wave, you're gambling, not building. Big breaks are unpredictable. Systems are controllable. And consistent profit favors what you can control, not what you can only hope for. At the heart of every consistently profitable business are simple, repeatable systems. Not complicated strategies, not constant reinvention, just clear processes that are followed every time. Standard operating procedures matter. Documented steps for sales, onboarding, delivery, billing, and follow-up reduce chaos. They make outcomes more predictable. They make training easier. They reduce reliance on memory and mood. You don't need to track 50 metrics. In fact, that usually creates confusion. Instead, focus on a small number of key performance indicators: revenue, profit margin, customer acquisition cost, retention rate, and cash runway. When you track a few critical numbers consistently, patterns become visible. Reducing variability is powerful. If the customer experience is wildly different each time, results will be inconsistent. If expenses fluctuate unpredictably, profit will too. Systems smooth out those extremes. Then comes incremental improvement. Not dramatic overhauls, not constant pivots, small refinements, a slightly better sales script, a more efficient fulfillment process, a minor cost reduction. Over time, these small gains compound. Simple systems feel boring because they remove drama, but they create reliability. And reliability is the foundation of consistent profit. Revenue gets attention. Margins build wealth. A business with strong margins has room to breathe. It can handle slow months. It can invest in growth. It can survive mistakes. When margins are thin, everything becomes fragile. One unexpected expense can erase months of work. One pricing mistake can create serious stress. High revenue with low margins often creates the illusion of success without the reality of security. Chasing revenue growth without profitability is a common trap. It feels productive. It looks impressive. But if each additional dollar of revenue barely adds profit, scale only magnifies inefficiency. Cost control is not glamorous, but it's powerful. Negotiating better terms, eliminating unnecessary subscriptions, streamlining operations. These actions rarely make headlines, but they strengthen the business quietly. Saying no is part of protecting margins. Not every client is worth taking. Not every opportunity is aligned. Low-margin work consumes time and energy that could be used more effectively elsewhere. Strong margins create resilience, and resilience is what makes consistent profit possible. Motivation is unreliable. Some days you feel unstoppable. Other days you question everything. If your profit depends on how inspired you feel, it will always be unstable. Discipline outperforms inspiration. Discipline shows up whether you feel like it or not. It follows the process. It reviews the numbers. It executes the plan. Routines reduce decision fatigue. When you know exactly when you review finances, when you prospect, when you optimize operations, you don't waste energy deciding what to do. You just do it. The unremarkable days matter most. The days without excitement. The days without major wins. Those are the days where systems are followed quietly, where small tasks are completed, where consistency is built. Separating emotion from execution is critical. You can feel uncertain and still follow the plan. You can feel confident and still stick to the rules. Consistent profit is not built on emotional highs. It's built on repeated actions performed steadily over time. No one brags about their cash reserves. No one goes viral for conservative projections. But protecting the downside is what keeps you in the game. Before chasing upside, you secure survival. That means maintaining cash reserves. It means understanding your fixed expenses. It means knowing how many months you can operate if revenue slows. Conservative projections prevent painful surprises. If you assume best-case scenarios, you'll overspend. If you plan for moderate outcomes, you create buffer. Over-leveraging is seductive. Borrowing heavily to expand quickly can amplify gains, but it also magnifies losses. When markets shift or demand drops, debt becomes pressure. Trend chasing creates similar risk. Jumping into every new opportunity without testing increases volatility. It adds complexity and distraction. Survival is the first priority. You cannot be consistently profitable if you are constantly on the edge of collapse. Stability gives you time to adapt, time to refine, time to recover from mistakes. Risk management may be unsexy, but it is essential. And essential beats exciting when the goal is consistency. Massive breakthroughs are rare. Small improvements are available every day. A slightly higher conversion rate, a small reduction in costs, a modest increase in customer retention. Each change seems insignificant on its own, but repeated over time, small gains compound. A 2% improvement this month, followed by another 2% next month, builds momentum. The effect accelerates quietly. Reinvestment plays a major role. Instead of immediately upgrading lifestyle when profits increase, reinvesting into marketing, systems, talent, or product quality strengthens the engine. It increases future earning capacity. Compounding is both mathematical and psychological. Mathematically, returns build on prior returns. Psychologically, confidence grows as steady progress becomes visible. That confidence fuels further disciplined action. The challenge is patience. Compounding rewards those who can delay gratification, those who can accept modest progress today for greater stability tomorrow. Many people quit too early because the early stages feel slow. The curve looks flat before it turns upward. Consistent profit favors those who continue refining, reinvesting, and repeating long enough for compounding to become undeniable. Marketing doesn't have to be clever to be effective. Clear positioning beats creative confusion. If people instantly understand who you help and how, you've already won half the battle. Consistent messaging across channels builds familiarity. When your website, emails, social posts, and conversations all communicate the same core promise, trust increases. Repetition reinforces credibility. Constantly reinventing your message creates noise. It may feel innovative, but it often confuses your audience. Stability in communication makes your brand recognizable. Retention is often more profitable than acquisition. Serving existing customers well, improving their experience, and encouraging repeat business creates predictable revenue. New customers are important, but constantly chasing them can be expensive. Trust is built through reliability, delivering on promises, responding consistently, showing up regularly. None of this is flashy. None of it guarantees virality. But over time, boring marketing builds a reputation, and reputation turns into referrals, renewals, and steady growth. That steady growth is what supports consistent profit. Strong months can create overconfidence. You start believing growth will continue indefinitely. You loosen standards. You increase spending too quickly. Emotion overrides discipline. Slow months can create panic. You doubt the model. You consider drastic changes. You abandon strategies that simply need more time. Emotional control keeps you steady in both situations. It reminds you that 1 month is data, not destiny. It encourages analysis over reaction. Data-driven decisions protect profit. Reviewing numbers objectively, identifying trends, and making measured adjustments reduces volatility. Ego-driven reactions increase it. When confidence is high, emotional control maintains restraint. When fear rises, it preserves clarity. Over time, this stability compounds. Consistent profit is not just a financial outcome. It is a behavioral one. The ability to remain calm, measured, and disciplined through fluctuations creates long-term resilience. Emotional stability may not be discussed often, but it quietly separates fragile businesses from durable ones. Short-term thinking prioritizes immediate wins. Long-term thinking prioritizes durability. When you plan in multi-year horizons, decisions change. You invest differently. You hire differently. You price differently. Sustainable growth often looks slower than rapid expansion, but rapid expansion without foundation can collapse under its own weight. Sustainable growth strengthens systems as revenue increases. Building durable assets matters. A loyal customer base, a strong reputation, documented processes, healthy cash reserves. These elements increase stability over time. Staying in the game is powerful. Many competitors exit due to burnout, poor risk management, or impatience. Longevity itself becomes an advantage. When you think long-term, you optimize for survival and steady improvement. And survival plus steady improvement repeated long enough leads to consistent profit. After all of this, the conclusion may feel underwhelming. There is no hidden tactic, no secret growth hack, no magical breakthrough waiting to be discovered. Consistent profit is built on systems, on strong margins, on discipline, on risk control, on incremental improvement, on emotional stability. None of these are exciting. All of them are effective. Consistency feels boring because it lacks drama. There are fewer dramatic highs, fewer stories worth bragging about at parties, but there are also fewer catastrophic lows. You face a trade-off: excitement or stability, spikes or predictability, gambling on rare outcomes or building reliable processes. One path creates adrenaline, the other creates durability. Over time, durability wins. Profit is not the result of intensity. It is the byproduct of sustained, disciplined execution, of doing the same important things well, again and again, of protecting the downside while steadily improving the upside. The boring truth is this: consistent profit belongs to those who embrace the ordinary work, repeat it relentlessly, and allow time to do the heavy lifting.